Hi everyone. Today let's take a deeper look at the jobs data. Then we'll look at sentiment and the economic calendar for next week. Then we'll look at the charts, as well as my results for the week and my thoughts going into the Tuesday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the jobs data, we got more than expected, like we talked about in the Friday session, but this article kind of talks about the relevance a little bit better, in my opinion. We've been talking about how the jobs market has been quite hot, and that's been fueling inflation. You can see now payrolls have been moving lower. We had a pretty decent dip in June. July numbers were decent as well. And then August, pretty much on par with July. And you can see the unemployment rate was falling as we were adding those jobs. And then we got a little tick up, which is interesting. We talked about that as well. Is this the start of a bigger move higher on unemployment? That could absolutely be the start to the recession that everyone's been talking about for basically a year at this point. And that is something that we have to keep an eye on. But the more interesting part of this article is that they talk about how we've added all of the COVID jobs back and we continue to trend higher, indicating that the economy is actually doing quite well and actually better than the COVID highs at this point. Obviously, the markets are much higher than the pre-COVID highs, and we didn't even get back to that level. But it is interesting to see that jobs are actually going higher, meaning that the stock market is actually reflecting the jobs market a little bit better than was previously thought. I still think we're a little bit expensive, but it's good to see that jobs are continuing above the pre-COVID numbers and that economic strength is continuing despite the rate hikes. Moving over to sentiment, this is the August 30th numbers, and we are basically neutralized here. Bulls at 33, bears at 34.5. Neutral at 32.4, I would probably fall into the neutral category. Could absolutely go higher from here. We've been on a bullish run, but we're at some clear resistance, and we'll talk about that more on the charts. And I do think neutral is the right call. Moving over to fear and greed, we're actually just barely in the greed category. The previous close was neutral, and we've been neutral for a while. You can see a week ago we were neutral. 1 year ago we were actually neutral. Obviously we went into extreme greed between a year ago and now, but we're back into greed, which is interesting. Market momentum also in greed. Stock price strength, more towards the neutral side. Breadth, definitely towards neutral. We'll talk about that on the charts as well. Put call ratio has moved back to neutral. You can see we're pulling back a little bit from that high at the end of August. Market volatility, we are back in this mid-range. We talked about that on the VIX chart on the Friday video, and we'll touch on it again later. Safe haven demand continues to be in fear. People are buying money market funds like crazy, and junk bond yields are also quite low, indicating more towards the greed side. Moving over to the economic calendar, don't forget Monday is a holiday for Labor Day. Markets will be closed. Tuesday, not much. Factory orders, not that interesting. Looking at Wednesday here, however, we do have global U.S. services PMI. That will definitely be interesting. U.S. is service driven. It is expected to grow. It's above that 50 line for expectations. You also have ISM non-manufacturing PMI and non-manufacturing prices at 10 o'clock. Fairly relevant. Looking at Thursday, we have GDP for the Eurozone, also interesting, non-farm productivity, as well as jobless claims. And then looking at Friday, not much at all in terms of economic data, and a pretty light week overall. Just that Wednesday session, pretty interesting with all the ISM data. Moving over to Max Pain, you can see it's sitting at 445, current stock price about 1.5% higher than that. Put walls at 440, kind of 445. Calls here at 453 and all the way up at 466. Top of the puts sitting around 454 up to 456. Put call ratio still quite high, 2.65, and already 1.1 million options. Pretty high for an off week before the week even starts, especially on a short week with the holiday. Otherwise, currently looking at a finishing price on Friday between 445 and 453, and we'll continue to cover this throughout the week as the options market shifts. Moving over to the charts, starting off with the S&Ps here on the weekly chart. You can see we hit that trend line, rallied right up to the next trend line. Last week we talked about this might be just an initial retest, which it ended up being. Could have been a test/rejection, but you can see slightly bullish candle, which was interesting. And zooming in here, you can see that a little bit better. Hit VWAP, almost hit the 9 EMA. Still very much a bullish trend on the weekly chart, so you have to respect that. Came off this trend line, hit the next one, definitely at a critical level. This is a longer term resistance. If it breaks here, you could be looking for a new high from this previous one, up around 46.36. That would be nice, a little bit of a rally up to resistance. Momentum stepped down from bearish, so this is looking like a shorter term pullback and potentially looking for a rally into the next week or two. And moving over to the daily chart, you can see that same critical trend line. We hit it on Thursday and then we hit it again on Friday, pulled back both times. You really need to see a push above that 453 level if we are going to get the continuation rally up to that 463 area like we talked about. So critical level here. You can see very powerful horizontal resistance, the bottom of this consolidation before we had the bigger move down. If it's going to break down and set up that lower high, it really needs to do it now. And similarly, if it's going to break out to a higher high, it needs to do it now. Momentum still bullish, RSI still bullish, so we are still in a shorter term bull trend, even here on the daily chart. We did get the 9-day moving average just above the 21 on the Friday session, so we're in a technical bull trend as well. Not all the way because we're still below the 55, but we did get the cross. And at this point, even if we did get a reasonable pullback, I would expect to pull back to the 21 EMA down at 444, and then we would find some support and potentially push up to those new highs above this previous high if we did hold that 21 EMA on the pullback. Moving over to the NASDAQ on the weekly chart, very similar thesis, came down to longer term trend support, rallied 2 weeks ago, got to this trend line, rallied off of that one right to the next one. Again, critical level here. If this level breaks, we can look for a push up to that 16,469 level. Momentum bullish, RSI looking to retest that SMA. If we did get to a higher high, I would expect to see some RSI divergence, getting higher price action but lower RSI read. Then we would have to look for follow through on that divergence to the downside, in my opinion. Otherwise, we would need to make a much higher high to get that RSI to break above these previous overbought conditions. So definitely something to watch. Everything looks a little bit bullish right now, but it still could be establishing that bearish divergence on the weekly chart. Moving over to the daily chart, you can see that gap up and fall from this shorter term trend that we were watching. Didn't quite get to my level at 381.54, but we're still holding that 376.45 level. That is a pretty important level. As you can see, that was the neckline here from this lower high setup before we had that bigger breakdown. Broke through that level, chopped, retested it, rejected, and then continued lower. So very important level. As long as this holds, I think we're in good shape. If this does break down, again, you could be looking for a retest of that 21, which is currently sitting at 368.27. If the 21 holds, then this would be another higher low, and then you could be looking for a higher high at these previous highs, or potentially all the way up to 389.37. Moving over to the Russell on the weekly chart, bullish momentum, RSI retesting the SMA. This is a higher low setup off of the 21, kind of like we talked about that we were looking for on the daily charts on the SPY and the NASDAQ. Hit that level, found support, rallied up into this zone. Now, if we break above 191.89, this could be looking for at least a double top, if not a higher high setup. If 191.89 continues to hold, then you're looking for that lower high and potentially a pullback to this previous consolidation all the way down at 172.60. And looking at the daily chart just for a moment, you can see we tested that level for the first time on Friday. Still was a bullish candle and we were able to hold most of those gains. So certainly could just be that initial test, slight pullback, hold that level, and then continuation rally up to 193.93 or the next horizontal resistance at 195.15. Certainly possible. Right now, everything still looks bullish. RSI well above the 50 line. Momentum still ticking bullish. And the Russell looks quite good going into next week. Moving over to the Dow on the weekly chart, you can see this trend line going back to October, marked the low in March, marked a wick low here in May, kind of consolidated at that level before breaking higher. And then once again, we've tested that this week. Definitely interesting. Looks like an initial test, just like we talked about on some of those previous charts. Initial test, held most of the gains, and based on that, you would expect this to continue. Momentum didn't tick higher, which is interesting, and RSI is right on that SMA. Still bullish, but interesting. Really, you need to see it hold this gain, continue above this 350.92 level on the Dow, and then start to push towards these previous highs at 356.48. as long as we continue to see that bullish price action up to those previous highs, holding the current gains and not rejecting off of this trend line, we should be in good shape. If we immediately start to see a pullback from that trend line, then I would be looking for a lower low, at least down to the highly traded zone at 338.58, or potentially all the way down at the 144 EMA down at 334.69. Moving over to the daily chart, you can see we've had basically 3 days of indecision. We had a straight doji, then a gap up to that next resistance, rejected all the way down to the next support, and then similarly here, gap up, fell, tested support, and then held right in the middle of the range. Slightly bullish momentum. Technically a bullish candle based on the gap up, but 3 days in a row of sideways price action. The Dow did a very similar thing here in August of sideways price action, and then mid-August, 4 days of sideways price action before that dip low, moving into the rally. Certainly could be a consolidation here for a couple more days. You can see there's definitely some volume, but as long as this 347.67 level holds, then I would be looking for that next push up to that 353.62 area. Bullish momentum, bullish RSI, looks okay, but like I said, you need to see at least that break of that next level. Moving over to the equal weighted S&Ps on the weekly chart, looks very similar to the Russell, and it does look quite bullish. Pulled back, hit the 21 and the 144 EMAs, held that level, rallied up, hit the 9 EMA. You want to see it break that on the weekly chart. Slight step up on momentum, RSI right at the SMA, want to see it break through there, start to push towards overbought conditions, take out this previous high. That would all be very bullish, and it does certainly seem like it's setting up for that, coming off of the 21, rallying aggressively. Just seems like an initial push. We got the breakdown from the rising wedge, back to trend support, which has currently held, still looking bullish. Moving over to the daily chart, you can see we had a rally from Friday of 2 weeks ago all the way up until Wednesday of this week. Bearish engulfing candle on Thursday, which was interesting. Then we got the gap up and fall on the jobs data. At this point, we're above all of the EMAs and SMAs, which is definitely bullish. We haven't gotten the cross yet, and the EMAs are not in order. You have the 55, VWAP 21, 9, and then you have the 144 and 200 sitting down here. Realistically, I would like to see this rally up to 153.19, break down from that level, retest the 21 after getting the cross, and then we would see that bigger rally off of that level. Certainly seems like a possible scenario. Right now, momentum is bullish and RSI is still bullish, so it could continue to rally up to that level. If it breaks that level, then you're looking at the previous high at 155.79, which would be a pretty extensive move here for the equal weighted S&Ps on the daily chart. Moving over to the ratios, starting off with copper versus gold. We've been talking about this thesis for a while. Rallied up, expected a higher low, and now we are rallying up to this next zone. Thesis still intact. We had a doji 2 weeks ago, but this week was quite bullish, and we did get above the 9 EMA. So definitely in a bull trend. We're above the 21 as well. Obviously, we're going to have some resistance around this 2032 area at the 200 and the 55, but overall, does seem like this thesis is still intact. Bullish momentum, RSI looking to cross above the 50 line, holding that SMA as well on RSI. I want to see volume pick up here a little bit. That would be nice, confirming the rally a little bit better, but overall price action is still supporting the thesis. Moving over to SPY Russell and NASDAQ Russell. I just want to highlight how much the Russell really outperformed this week. You can see a big bearish engulfing candle on SPY Russell, meaning that the Russell did outperform the SPY on this week. And this does seem like it's going to continue. So we might see some Russell outperformance over the next week or two, at least down to this 231 area. That would be interesting. If that level breaks, we could be looking at the 55 EMA all the way down at 223. NASDAQ Russell also rejecting off of this 818 level. You can see that here. We've had a couple of wicks to that level, another wick this week. Still technically a bullish candle, but definitely a rejection from a key area. Momentum kind of undecided. RSI looking to retest that SMA and then break down, in my opinion. Overall, fitting with the thesis that the Russell should outperform the NASDAQ and the SPY, at least in the next week or two. Moving over to SPY divided by the M2 money supply. Looking at this 2205 level that we've been watching for a very long time. It does mark the all-time high back here in November and December of 21 before we had that bigger breakdown. You can also see that pre-COVID high before we broke down. And we are right in that zone once again, tested this level, found some support off of trend. Now we are pulling back into the zone. We talked about how we can chop in this area for a while. We had this initial breakdown just like we just had, chopped in this area for a while before we had that bigger breakdown towards more reasonable levels. And if you go way back here, you can see anytime we get into this 2205 area, we ended up breaking back into that zone. The only time that we were able to hold above this level for any length of time was during the dot-com bubble. And after this monumental rally, we ended up pulling all the way back down to this 14 area. And then you have the 2008 crisis where we got to super cheap prices in that 8.2 area before we rallied back into this zone during that pre-COVID high. So 2205 on this ratio, absolutely an important level. Even if we do get a breakout here, I wouldn't expect to stay above this forever. Doesn't mean that we can't get above it for a long time, just like the dot-com bubble. But critical level here, if this continues to hold, we could be looking for a bigger pullback over the next couple of weeks. Moving over to Apple and Tesla, you can see Apple had a massive week, up 6% after that big move down from earnings. Momentum stepped down. RSI looking to pull back to the SMA, retest that area. Certainly interesting. And zooming in here, you can see what that looks like. Big leg down. Found some support, rallied up into this area. The question is this going to be a lower high? Are we just going to test this trend and then break down from there? Or are we going to break above this previous high and start to push to this longer term trend up around 210? That would be interesting as well. Not a super critical level and everything still looks bullish, so you could certainly look for a double top or at least a test of this previous area. Tesla, on the other hand, threw a big wick to resistance at 255.44, as well as VWAP and the 9 EMA. And zooming in here, it looks quite weak. Big wick rejection off of clear resistance. You also have the 144 week moving average at 245.56, which ended up holding bearish momentum. And we talked about this on the Friday session, big bearish week for Tesla, and I would expect this to actually follow through to the downside off of that wick rejection going into Tuesday and potentially Wednesday as well. Moving over to Lulu and NVDA, I want to highlight Lulu here because it had a massive breakout on earnings above this previous level at 385.82. Looks very bullish. We're kind of testing these highs from April of 22. But if this rally continues, you could look for a retest of these highs up around 474. The earnings was very good. They raised guidance as well. Everything looks pretty clean on Lulu. So pretty good opportunity in my opinion. Definitely interesting. NVIDIA continues to drive the market higher. We got a new weekly high close for NVIDIA. We're at key resistance, which is interesting. We had this consolidation before we had that breakdown, retesting that trend now. So far, we continue to reject off of that trend. So certainly an interesting level. If it breaks out, however, you could look for a push up to 536, 37, 538 potentially. Momentum kind of neutralized here. Volume continues to look clean. We've been overbought for a long time, so our RSI not doing a lot of help here on the weekly chart. Overall looks bullish. Moving over to staples and discretionary. Staples looking weak on the weekly chart, breaking below the 144 EMA, watching that 70.85 level for the next potential support, or possibly even as low as the 200 sitting at 69.43. This looks quite bearish, definitely a technical downtrend, indicating that we're not fleeing to safety quite yet. Discretionary had a bullish week coming off of this trend here. Didn't quite test my next trend up around 173.28. Get another week, get above this level here on 170.68. Potentially look for that 174.76 area, which is basically at this previous high already. Momentum still bearish, so you do have to account for that, but RSI is ticking higher. Volume also ticking higher with the bullish move. So overall, still looks like we're in a risk-on type environment. Moving over to tech and oil and gas. Tech had a nice bullish week. Looking at this previous high, still holding just below 177.11. If it does break that level, that would be a new all-time high for tech. Certainly possible. Momentum ticking in that direction. RSI needs to get above the SMA. And similarly to the other charts, if it does take out this high, you can see we were super overbought, so you'd be looking for a divergence at that new high. Certainly a possibility. Oil and gas, on the other hand, broke above this consolidation. Looks super clean up to these previous highs now at 160.73. Momentum super bullish. RSI on the weekly chart not overbought yet, so looks good to the upside in my opinion. Moving over to the 50 and the 200-day averages for breadth. Breadth did tick up quite substantially this week. We talked about that happening in the previous week's video. We had the candle of indecision at an area of potential support. Then we got the rally up to trend, which is interesting. So if this breaks higher, could be a continuation up to this 77 area. Again, still could be looking for a lower high from there. But right now this looks bullish, momentum ticking towards bullish. 200 SMA came off of the 55 average. Momentum didn't tick towards bullish, but it is at that 50 line again. So if we break above that, that could be a nice little bullish indicator. Right now, still looking for a lower high setup, which still could give you pretty substantial upside potential. And everything looks pretty bullish going into the next week. Moving over to yields here on the 2-year and the 10-year on the weekly charts. Got big bearish engulfing candle here on the 2-year. Does look quite bearish. Momentum fading. RSI breaking below the SMA. You really want to see this break back down to this 4.6 area, potentially all the way down to 4.5. That would be interesting. And this is partially driving the rally in equities, in my opinion. You got yield starting to pull back fairly substantially. 10-year yield did push lower. Tested that 9 EMA and then kind of bounced up from that area. Right now we're looking at a double top, tested this previous level, rejected from that area. Obviously both of these are still technical bull trends, 921 and 55 EMAs on both, all in line, but clear resistance and clearly pulling back from those areas should give equities a little bit more room to the upside, especially in growth and tech. Moving over to the dollar on the weekly chart, this is the one that kind of goes in the face of my current thesis. We did pull back, and we expected that from this key level, but look at this candle, huge wick to the downside, ended up finishing bullish, momentum still bullish. And zooming out here, if it gets above this level and pushes through to 105.50, that would put us above all of the EMAs and SMAs on the daily chart. And if we continue to see bullish dollar, that could be a bearish signal for equities. And you do have to account for that. It does look bullish right now. If it's going to break down, it really has to do it now. Moving over to bonds, JNK and TLT, you can see this wick rejection on JNK, but still bullish momentum, still above the 50 line. Could be an initial test if we see another continuation rally above this previous high, above $93. That would be quite bullish in my opinion. TLT, on the other hand, also showing some signs of life from this previous bottom. Big bullish candle. 2 weeks ago, we did get a wick rejection from that 96.50 area, which is not what you would want to see. So you do have to account for that. We talked about how it kind of looks like a head and shoulders on the daily chart, but we haven't seen that follow through to the upside yet. Really, you want to see it get above that 96.50 level, hold, and then you can start to look for a push up to these EMAs here on the 21 and 55, up in this 102 to 103 area. You can also see RSI showing some signs of life. We bottomed out on the week of the 14th, had a bullish candle, had a tick up in RSI, and then RSI currently sitting at 35. Still a bearish number, but it is a little bit higher from this previous candle. And overall, again, showing signs of life potentially, but be patient on this one. Moving over to volatility, you can see this long-term downtrend line that I've been watching, and that's exactly where we're at. We talked about it in the Friday video, testing that level. If it's going to hold, it really has to do it now. Weekly momentum was a big step down, and it could absolutely break through this level. Looking for that 1177 area, going all the way back to the June and December of 18 and 19 lows. So certainly could go lower and certainly could hold in this area. Doesn't mean we're going to bounce right now. But if it is going to bounce, you really would expect it to happen off of this trend support. We got the big break higher, tested this trend resistance. Now we're at trend support. If this is going to continue to be relevant, you want to see it rally here. Again, potentially indicating that pullback to the 21 EMA like we talked about on the NASDAQ and the SPY. Moving over to my accounts, you can see I did make some money on the week. It was pretty good. Up around $1,800 on the week. Pretty easy when I trade the NASDAQ bullishly, and the NASDAQ was up around 3%, so I didn't participate in all of the gains, but that is part of my strategy. I don't participate in all of the downside, which means I don't get to participate in all of the upside. I just try to maximize it to the best of my ability. And so far, this was a pretty good week, $1,800, you like to see it. In terms of positions, IWM, covered call, I might add to this based on what we saw on the ratios. Should expect a little bit of IWM outperformance, as well as the NASDAQ kind of underperforming relatively, certainly a possibility. NASDAQ positions still have covered calls here for 373 for that Tuesday session. We'll see if I end up rolling those out or not. I do try to carry a 200 share core position. I also have a 176 put. If I do let these shares go, I can start to roll some puts out to try to get into some new shares to help mitigate some downside potential. We'll see how that plays out. But overall, you can see I am basically neutral. One put, one call, and then the covered call going into Tuesday and Wednesday of next week. Let me know down in the comment section what you think of the jobs data. Is it a slight uptick? Is this the start of an uptrend in unemployment? Or is it just a slight weakening, looking for that soft landing that the Fed continues to talk about? Certainly interesting to see as we go forward. Like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.